Good morning, everyone. DMGN, and welcome to another episode of FOMO Hour. Today is Thursday, May 15th, 2025. Eyes of May, halfway through this month already. Flying by, folks. This is our first red morning. What feels like a while. Crypto's down, stocks are down. We had some negative Coinbase news landing this morning as well, though not a huge surprise. I think the question is, our recent rally, is it over or just a minor pause in this bigger leg up? We're going to break it all down on today's show. I got my co-hosts in the house. Mando, Logan, Stats is supposed to stop by today as well. How are you guys doing? Mando.
I'm doing amazing, man. Very, very busy last 24 hours. But good. Market, I mean, it's not that over, really, is it? It's just a little bit of the wind getting taken out of the sails. I feel like that's it.
Minor pullback, minor pause. Yeah. Let's catch our breath.
I think we're fine
from what has been a bit of a breathtaking rally. Logan.
Yeah, sure.
Hey,
no more yellow.
I know. Yeah, good morning. It's dreary here. I think it's rained almost every single day since I've been back from Peru. So that, coupled with the prices down, makes it a little more of a BM, a little more of a bad morning than it would have been when I was in Peru. But I'm still glad to be here. So
maybe our weather will come your way. It has been absolutely gorgeous in Chicago. 70 degrees.
I would like that. But it just rains every day here in Pennsylvania.
Times are tough. BM for Logie. Well, hopefully your BM turns into a GM here shortly. Folks, what are we talking about on today's show? We've got Mando. We'll go through the market report. PPI coming in negative. Powell saying higher for longer. We've got it was a big day for the ETFs yesterday, despite some of this action. We've got this Coinbase exploit. We're going to break down what that is, how big of a deal it is. Ethereum's new $1 trillion security initiative. Tether going deep into big AI. That was a bit of a surprise yesterday. We've got the launch coin latest. The eco still cooking, but maybe a little pivot on the table from Mr. Pasternak. Some new NFT mints continuing to grind up, and perhaps some more puncture reactions from Stats here in a minute. Before we dive in, a quick shout out to our partner, Wallet Connect. Wallet Connect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen Wallet Connect, that blue logo. It's everywhere, an icon of trust in crypto, as recognizable as a Visa at the checkout. If you want to learn more, follow at Wallet Connect on X and Telegram to stay ahead of what's next. All right, Amanda, if you're ready, let's get into it.
Who is the man, macro daddy of the land? Can you dig it?
GM, everyone. So we've had a little bit of a weaker start today. I think the majority of that is it was a bit of a macro day. So we had PPI come out earlier today. PPI is a producer price inflation. It's like the other inflation metric based on producer prices. And that came in with a big miss. In fact, it showed deflation, which is kind of surprising, kind of fits in with what trueflation figures have been showing rather than some of the inflation expectation figures. So big miss. Maybe points to the idea that the Fed can cut rates a little bit quicker than had previously been expected. And yeah, let's see where that one ends up. On the back of that, stocks again had a good period here. They were up again yesterday. They're down today, so they're down for the first time in 4 sessions here. And gold has been heading a little bit lower for the last few sessions, though it's bounced very slightly today. So the fact that crypto's down kind of makes sense in the world of macro here, because you've got stocks and you've got gold lower now. It's not crazy. I would say that PPI miss is a good thing for the market, because I think a lot of people were scared about tariffs causing runaway inflation. So if we're at this sort of stage before those tariffs come in, then I think we're at a good point. So I don't think it's like going to be something where Bitcoin gets absolutely smashed lower, but it's just interesting to see, a 1% move in Bitcoin is absolutely smashed a bunch of altcoins. And I still think there's another couple of weeks in this little mini altcoin thing, because I'm bullish on ETH, as I've said a number of times at the moment. I think that's going to go to 3K plus here. and that will mean that altcoins naturally, I think, get a bid. But I would be a little bit wary of other things, and the reason why is I don't think this doesn't remind me of Q4, where I felt like there were a bunch of new entrants coming in to buy bags. This feels like the people who are still around trading between themselves on narratives and assuming they're going to have the same narrative as, let's say, the AI move. The AI move, I felt like onboarded a lot of people actually at the time, and there was a lot of people, new wallets, I think, coming in to buy. I don't see many people buying. I continue to not see too many new entrants here. It feels like it's it's PvP world. So I'm still a little bit wary on like broader altcoins, but I do think ETH is going to go higher, and that will probably mean that things don't get altcoins. I think Bitcoin dominance can go a little bit lower in the short term. In terms of like big news, you kind of covered some of the main stuff there. So ETH Foundation is doing a security initiative at the moment. I don't really know if that's going to be like some huge thing. JP Morgan, big bank, settled their first transaction on public blockchain. I think that was not to be surprising, but you're going to see a lot of big banks come in and decide they're going to do that. Mastercard's doing these stablecoins. Yeah, it was nothing major in terms of like headlines overnight. Just that we'd had a little bit of a sell-off here because of macro, and that macro had a good run, and this kind of makes sense. I would not be selling today. That's what I would say. I am rebuying a lot of the stuff I sold around this time last week. On only on select things though. So ETH and ETH beta. So I'm buying some ETH meme coins and ETH, and then I have bought a little bit of Fartcoin for that.
Ooh, a little Fartcoin nibble. Like to hear that. We telegraphed this on the show yesterday, but interestingly, Hyperliquid spot, we did see Fartcoin flip Bitcoin in trading volume on the day. It looks like now over the recent 24 hours, it's now back to fourth, but that was somewhat notable. Well, a few reactions to your market report, but first we've got Stats in the studio with us. Stats, thanks for joining us, Gian.
What's up, boys? Sorry I'm late. I live in the mountains and my Wi-Fi went down, and then my phone doesn't work at home, so I can't just like hotspot in. So it's a bit of a mess, but here we are. Took a little 3-minute drive, and now we're good.
That's the mountain life for you right there.
There you go.
Mando, I think what was somewhat notable from this morning, and maybe this is just Powell posturing, but we had PPI come in negative, so deflating month over month, and then he's cautioning for higher for longer. So you think that's just him kind of holding his cards close to the vest?
I mean, he can say one thing and not follow through with it. I don't know why on the back of that figure you'd ever be like higher for longer. That's clearly a deflationary figure. I think the only thing to say here is that Powell, I don't think, can move up. You can't just look at this and go like, oh, we're going to drop rates, because the tariffs are about to come in. And I don't think the Fed can really do anything until late Q3, Q4, even if they wanted to. They've got to see the result of the tariffs. So there's a lot of focus on Jerome Powell and what he can do. I don't think you're going to see Jerome Powell do anything for quite a while here. I think in terms of global easing, I think you've got to look at Asia as the main place for that at the moment.
Feels right. I mean, the CME rate cut futures have made some pretty drastic moves. So July is still an underdog for a rate cut. That was pretty heavily favored. And now I think by end of year, 20% shot at just one cut. The favorite at 37% is 2 cuts. And again, in Q4, so along the lines of what you're saying, after we've seen some of the tariffs start to roll in. But then even that gets muddy with, you've got like the temporary 90-day program with China. We don't know if that's going to get extended. We don't know what's going to go up or down from there. And if we don't know, Powell doesn't know, right? So he can continue to point to the uncertainty.
No one ever knows. I mean, that's just the thing about the world and about macro data. No one ever knows. I mean, I remember when I worked at when I did macro research at Goldman Sachs, I'd go around and see clients 3 times a year, and I'd say of the 7 years I did that, 21 kind of road trips. We don't know what's going to happen was the theme of every single one.
Yeah, that is. I mean, if we knew, if we had the crystal ball, we'd all be very rich. So I thought that was interesting. I think another interesting macro. I mean, you mentioned it doesn't feel like there's new entrants, right? And I think that jives with what I'm seeing. But there is one sector of new entrants that is booming, and that's companies, SPACs, spinning up to buy Bitcoin.
Yeah.
It looks like we have another one this morning.
Logan,
I don't know if you took a look at this. Is this also in the DJT family? Now they're spinning.
Yeah.
up.
Sorry. I was just gonna say Devin Nunes is Trump Global Media, I believe, either CEO, board, or chairman of the board, or executive chairman, or something like that. He's the one who wrote the letter about the Truth Social token, if you remember that from a few weeks back. So I recognize the name. I don't know too much about him. So sort of Trump related, yeah.
But it looks like he had $210 million IPO in acquisition. So I believe this is another Bitcoin acquisition company. I haven't had a chance to dig into this specific headline, but it goes along with the general theme that we're seeing these new companies spin up as Bitcoin investment vehicles. And I think it's starting to raise more and more alarm bells to a degree. Like clearly it's driving inflows in the near term. I think there's big questions of what happens in a pullback. I think Stats, you've been kind of following this and kind of sounding, at least on the premium that some of these stocks have been trading at for these companies who are doing this. I guess what are your thoughts on where this is? Is this becoming one of the bigger risks to Bitcoin and the broader ecosystem here?
I'm not sure I see it as a big risk, to be honest, but I think this phenomenon is going to be very short-lived, and I think that I personally, like, at the end of the day, there's no narrative here. Like, these guys just know that the market, Bitcoin holding companies, particularly MicroStrategy, the market is currently paying 2 times NAV. What that means is if they spend $100 million and buy $100 million of Bitcoin, if you and I get together and say, hey, let's ask every rich person that we've ever met if they'll give us money, and we get $100 million, we use that $100 million to buy $100 million of Bitcoin, we put it into a public vehicle, and the market says, okay, that's worth $200 million. And then we sell our stock and we instantly make it 2x. Like, that's the model, because people are looking at MicroStrategy to say, hey, the market's paying 2.1x NAV for MicroStrategy, so maybe they'll pay us 1.5x because we're doing the same thing. We just don't have Saylor, so maybe we'll have a lower premium. But there's no narrative there. Like, there's no reason. I personally think it should trade at a discount to NAV, because at the end of the day, it's going to be harder for these guys to sell their Bitcoin at spot because they have a lot of it. And once it becomes clear that these vehicles are selling, people are going to want to front run that, and they're going to lower the price, and the price is going to go down. So ultimately, I would think they should trade at a slight discount to NAV as opposed to a premium. But they're just kind of playing on what's been an incredible phenomenon, which is MicroStrategy trading at more than 2 times the Bitcoin that they actually own. And I've seen DEX for it. I had a friend send me a DEX, say, hey, we're raising $100 million, and we think it's going to be worth $150 million in a week. And that doesn't work. Like, that just simply doesn't work over time. We saw it with SPACs. We saw it with GBTC. I think the SPAC phenomenon was better, because at least with the SPACs, you could go around and you could say, hey, DraftKings, is worth a ton of money. Look at this crazy amount of money they're going to make over the next 5 years. You should buy DraftKings stock. My friend is the CEO or the CTO of a company called QuantumScape, which was one of the most successful SPACs. It's down a lot now, but at least then you could tell some story about how their batteries were changing the world and keep people excited for a couple weeks, for a couple months, maybe even a year. I don't know what keeps people excited about this narrative for anything. Like, I think this collapses very soon. I just don't see what gives it any longevity, because it really makes no economic sense. It's just leaning on the fact that Saylor has created such a following, such an incredible marketing ability that people are paying 2.1x for the Bitcoin he owns. But it's not like any other person can just do that. And the other thing is that as long as this happens, more and more supply will come to market, because it's free money. And whenever more and more supply comes to market, the premium goes to zero and eventually it goes negative because the sentiment shifts and then everyone's stuck in these trades. So I don't know. I'm extremely negative on them trading at a premium. If someone buys $500 million of Bitcoin now and later has to liquidate, or that goes to par, I don't think that's a negative for Bitcoin. Like I'm not too worried about the underlying asset here. I don't think it matters that much. I do think if Saylor ever has to sell, that's a huge negative. And that's a bit of a risk.
Can we talk about how to value companies? Because I'm like kind of a little bit interested in how you would, because I was looking at this too, and I was like, right, well, maybe you value it like a major commodities trader, right? Maybe because they're often priced on book. They're like Glencore or even banks, right? Banks, you might think, okay, these guys own financial assets which they can make some sort of income stream on. How do we value it? To put into perspective, I think banks, sometimes they trade below book, but they normally trade like 1 to 1.5x book. And I think I looked at Glencore. Glencore trades at 1.2x book. And Glencore makes a ton of money every year.
But Glencore is a trading firm that is good at generating returns on capital. These guys have no illusion of generating returns on capital. They're simply, and capital being the Bitcoin price. Like they are simply owning Bitcoin. If Glencore said, "Hey, we're going to go spend $100 million and buy oil,"
yeah,
and that's
before
it.
We go down,
and it's just going to sit in oil. That's all we're doing. We're not going to use our expertise as traders. We're not going to use our technology. We're simply going to own oil. That's it. It would trade at the price of oil.
Yeah, but I guess so. And in general, I agree with you. I think perhaps one. I don't know if it's quite devil's advocate. Some of these companies like 21 Capital, I believe they are at least alluding to some kind of like financial engineering that they're going to do.
This is my point. This is actually my point because this is why people try and explain away the equity premium. They say it should trade at 2x book, but he's going to do this crazy thing in the future where it's going to generate some form of yield from the asset. That is the equity premium of these companies right now. They own so much, they are going to do something. And I was like, that as a narrative is not a new one. There's lots of companies that basically buy a commodity or buy an asset and just make a yield off it, and you own their equity. And the two major ones for me were commodity traders and banks. And both of those don't trade anywhere close to 2x book.
And they have long track records where you can see their ability of generating return on equity. They have very clear strategies. Here, there's none. Here, there's just like, hey, we'll do yield sometime, and we can't really explain it to you, but we'll do it eventually. So you're buying a dream.
So when you say that,
I do want to be clear. I think talking about MicroStrategy and talking about the rest of them, I think they're slightly different, just because MicroStrategy has built such a religion around it.
I agree. I think they're different. To wrap this up, you think it's a short-term phenomenon? Do you think it unwinds, or just that the premium? It's like if the premium goes to zero or even negative, and they trade at a discount, are these companies just going to close shop?
No, I mean, I would imagine that's why I said I don't think it's that big of a deal. Like, I don't think this is the type of thing that's going to like hurt MicroStrategy. I do think does pose risk, because if there's ever a hint that he has to sell Bitcoin, it is run for the fences. Because if he goes from being a buyer to a seller, like you don't want to be later than the guy who owns 3.5% of Bitcoin selling. I don't think that's a huge risk right now. I don't think he's going to be a forced liquidator anytime soon. No, I think they go to par, and then whatever. It's like people, maybe the investors who put $100 million in get their $100 million back, because that's, or it just kind of trades in line with Bitcoin, and it just kind of sits there as just a Bitcoin proxy. And I don't think that's a big deal. I just think I think this phenomenon of these things trading at a premium to NAV is gonna go away. I mean, maybe if they start trading at a discount, let's say these things trade at a 20% discount. I mean, GBTC traded at a 40% discount to NAV.
They'll just consolidate. They'll just consolidate. If that happens, the ones with the premium will just buy the ones at the discount, right? That's the whole reason why someone was going to buy GBTC in the end, because it was like, right, well, this trade.
That creates more risk, though. That creates more risk, because then you actually have like, if they continue to trade at a discount. But again, I think this is all a bit kind of inside baseball. I don't think it's super relevant for us. But yeah, if they consolidate, if someone buys the smaller ones, or if shareholders say, hey, right now we're getting 80 cents on the dollar. Let's just sell our Bitcoin and get $1 on the dollar. Because it's the difference between this and GBTC is this actually has a convergence mechanism. Like these guys actually can sell the Bitcoin and just get the cash and pay it back to shareholders if they want to. But yeah, I think Mando's probably right that they traded at premium. They consolidate unless they all start to trade at discount, and then maybe they sell all their Bitcoin, or maybe they just kind of wait for it for greener times.
It's an interesting discussion. I think it's one that will continue to be top of the timeline as we continue to see these companies pile in. I want to talk about ETH briefly with you, Stats. I know you're a big ETH guy. Love to celebrate ETH, showing everyone who's daddy on the days when it outperforms. I know.
Look how happy he is. He's almost crying on the stream right now.
Me?
Yeah, you look so happy when the ETH price was mentioned just then.
I'll be honest. My show him who's daddy, like, not to double use a word, but it's just kind of like a stupid dad joke. Like it's just like a meme where I know ETH is getting crushed. So anytime ETH goes up a little bit, I think it's funny to post like, show him who's daddy ETH. Like if ETH is up on a 24-hour chart, it's just a meme. It's just a meme. I'm just taking the piss a little bit. It's not like a serious, it's not a serious thing. I probably have more money in Bitcoin than ETH, and I shifted a little bit my ETH over to Punk. So I'm not like a huge ETH guy. I just think it's kind of a stupid dad joke to keep saying that over and over.
Of course. I know on Rector Radio yesterday, Mando, you guys kind of went around the horn a little bit. Just everyone's trying to figure out like why is ETH pumping. Stas, do you have a take on how we saw the 50%, 60% move in a week and a half?
I never know the inner workings of what's driving these things. It always feels like big players have a big impact. But I would think in this case, it's it's clearly we're in a bullish Bitcoin environment, and if you're in a bullish Bitcoin environment, regardless of what people on the timeline want to say about Vitalik or about how awful .eths are, or whatever people like to yell at ETH is the second easiest way to get crypto exposure in the world for any buyer. And I think people, you see Bitcoin rip, and eventually ETH can catch a bid, and there's probably some short squeeze on it where people are underexposed or where people are short, and that reverses. That would just be my guess. That in a global kind of bullish crypto environment, which I think we have been over the past month, ETH, regardless how hated it on the timeline it is the best place to go. If for most people, obviously ETFs in the US is just one example of it being the only other option you really have. So I think it makes some sense.
Nice little day on the ETFs yesterday. 63.5 million net inflows.
Let's go. BlackRock buying. Larry Fink bullish.
One of the highest in the last month or so, I'd say, for sure. I always find it interesting to read like what the analysts at like the larger institutions and funds are saying. In this particular report from Bernstein, they are pointing to the growing embrace of digital assets usefulness as more than stores of value, and increased institutional and retail interest adoption of blockchain and stablecoins as what's driving the Ethereum price action. So I did think that was interesting. Stats, you mentioned you're storing at least a good chunk of your ETH in punks. We've hit the punk story a decent amount over the last few days, but would love your take as a pretty decent sized punk owner. You're holding 3 of these things. It's pretty big.
I got 3 of them. I post new AI pictures of them every day. Look, I think net. I think this is a positive. I think that Yuga I personally like Yuga. I've always had respect for them. I think that they're generally good people, and I think that they did a good job with punks. But at the end of the day, it's clear like the crypto community has issues with them. I think the punk community has issues with them. So I think, and every now and then you'd come across people who didn't want to buy punks because they associate with Yuga. And I think it's nice to get that overhang out of the way. Is this, like Kobe or someone who like the community loves, buys them, and then everybody's like, oh fuck, I gotta own one. So floor shoots up from 45 to 60. No, it's not that kind of event. I think this is just more of like a long haul kind of cleaner holder for the asset. Asset's the wrong word. A cleaner holder for punks, better association for them. It does go to, so people have been posting about this, but Mickey Malka, basically it's his foundation. Him and his wife seeded the $25 million on it. So it does go to a person. It's still got kind of like a bit of an entity, but, Mickey's been a great steward for the space, someone who I think, loves digital art, who has, sufficient capital that they're not going to be out there trying to, squeeze the orange here and get juice from it. So I think as far as like one person who could really kind of be the behind the foundation that owns it, I think he's as good as you can get. So we'll see. We'll see what happens here, and that now it just becomes more of like a long grind towards greatness.
Well, so let's talk price action. So I appreciate your take. I actually read it on yesterday's show. Because I thought it was a nice balanced one.
Cool. Yeah. I mean, I saw a couple of takes being like, "Oh, this was like Yuga doing like, look at how down bad they are because they wanted tax benefits and blah blah blah." I mean, if you're talking about, and they didn't even mention the fact that they got 414 punks that they own themselves. They're like, "Oh, this was just a huge L on the IP." I mean, they clearly lost money on it, but to talk about this without even mentioning the fact that they own 414 punks is I think missing the story.
I am curious how they're going to monetize those. Like what?
Yeah, I've heard rumblings that there's a plan, but big holders are a big overhang.
Sorry, I was talking to people around this deal because I was reporting stories, and I got no comment on the future of the Yuga Punks assets, other than that they still own them. So,
yeah, well, thanks for that deep insight.
I know that's not too much, but
I've heard small rumblings that there are plans in it, which means that this isn't like a throw them in the vault situation. But I think that
they'll be smart.
One thing is pretty clear is that Yuga does take the legacy of punks quite seriously. So it's obviously throw it in the vault is better than any incremental buyer, but maybe they have, maybe Mickey wants to buy them, when in doubt.
No, but I want to talk about
was
so just quickly. So in yesterday's one of the day shows, I laid out my 250K price target for this cycle. So stats put you on the spot. Do you have a price target for the next year? Assume the scenario where it's a bull market we grind up through Q4.
I think punks need a catalyst to really have anything other than a grind higher price. I mean, one of the problems with what you're saying is like, it's just as dependent on the price of ETH as it is the price of punks. But, back in the day, there was the guy who swept 100 punks at once. That was just like a massive, like a 2x catalyst. And then Visa buying a punk was a huge catalyst. Like, I feel like something to kind of make the punk collection get traction outside of our universe. I think right now in our universe, more and more people are like buying their first punk. Like, I feel like we're seeing that. Punks OTC tweets that a lot. And I think that's like a bit of a grind higher scenario. But what's the scenario where you just get a whole new group of buyers interested? I don't know who that buyer would be. I don't know if it's like Eric Trump making it his PFP, not to get political here, because who knows? I'm just thinking, like, who are the people right now who have kind of a wider sway and a wider reach that could suddenly get convinced to be part of this collection? I think you kind of need something that, and again, I don't think Eric Trump would really move the needle that much, but like, what is something that could really expand the audience for these? Because we've kind of had the same people buying and selling this stuff for 3 or 4 years. Like, I think it's still, you've seen, first it was Bored Apes flipping punks, then it was penguins flipping punks. You've had those, but right now, at least in this moment, it's clear that there's nothing else out there. If you want to like have a PFP that kind of puts you in the PFP lore echelon. And so I think more of the space is starting to get interested, but what's the catalyst to get someone new involved would be my question.
I've got an idea.
Let's go.
Maybe a hot take, a little out there. The MicroStrategy of CryptoPunks. This feels very non-zero to me.
Yeah.
I mean, I would put a lower percent on it. I'd say I put it at like 10 to 20%. We've already seen companies piling Bitcoin clearly, Ethereum, Solana, Trump coin. We've got an ETF lined up for Pingu and Pudgy Penguins. It doesn't feel like a stretch to me that we get some kind of a CryptoPunk institutional buyer.
I agree. All you need is one. I mean, Visa bought one floor punk, and hundreds of millions of dollars worth of market cap. So it doesn't take much. It's got to get, it's kind of why I don't love the whole like do nothing obsession with punks. It's like kind of need people out there pushing it. Like you need salespeople, you need people marketing it, people doing things that generate attention, like to get more. I personally have never been a huge you must do nothing. But that's clearly the mentality that the community has taken.
I think Mickey is going to do something, which is a part of, I think, the bull case for him taking it over.
Yeah, I hope so.
Logan, did you have a take? I know I cut you off.
No, yeah, I was just going to add. I mean, you talk about what are the potential catalysts. I think this, IP transfer and sale acquisition by Node Foundation is exactly the right type of catalyst. Whether or not it'll be successful, but I mean, if you read through the announcement and stuff, I mean, they're very clearly focused on expanding this IP, not by doing new commercial endeavors, perhaps, right, but by making more people aware of it, which is how you get new buyers in, and potentially new institutions in, like museums, more museum type stuff like that. I know those are kind of like maybe little laughing joke things. I remember, Tyler, a year or two ago, sitting in Norway talking to you about, mutant apes potentially being in museums. You remember that big ape coin bill that Machi and others wanted to put? Like, that was kind of a joke at that point in time. But you need that type of stuff for punks to get in the eyes of more traditional holders to potentially really, really run the price up, if that's what we're looking for, aside from the gradual grind. So I don't see any other way at this point in time. I mean, I think this is a really good move to try and do that. I'm not a punk holder now, a former punk holder, but if I were holding one, I would have been, signed off on a transaction like this, and at least the vision forward.
Yeah. Oh, I'm with you. So it's gonna be interesting to follow. We've hit punks a good amount. I want to talk a little bit about this Coinbase news. This is pretty huge news, I think. So Brian Armstrong shared a personal video. It was about 2.5 minutes long, a bit too long to play for the show. Coinbase also published this blog that cyber criminals effectively bribed members of the Coinbase customer support staff to get access to customer data. They're saying it was less than 1% of Coinbase's monthly active users. They have a longer write-up here on their site as well. The exploiters, it seems like, tried to ask Coinbase for a $20 million ransom, which Brian Armstrong responded to this morning, and instead is putting $20 million out to help catch the criminals who are behind this. So if you have any information, you can get a cut of that $20 million by helping Coinbase and law enforcement to come after these folks. It does. I think there are some questions that have arisen from this. They've filed the official form of the SEC. I believe that the date they're saying for the hack was May 11th. I think anyone who has been involved in the Coinbase ecosystem would perhaps question that date. And the reason I say that is because many of us have been receiving scam texts, emails, phone calls for the better part of the last year, if not longer. So, I mean, maybe there have been multiple exploits. I don't know. But I think the question here, how bad is this? Phone numbers, email addresses are a part of this as well. And with, the increase in physical attacks that we've seen, I think address data, perhaps the most important in all this. But Logan, I'll grab my horn, but I don't know if you had a chance to dig into this. Reactions on your side?
Yeah, I didn't dig in specifically to this one, but I've been following those types of things quite closely here. The increase, as you mentioned, in physical attacks. There's a database, actually. Jameson Lopp has a database of it. I think there have been 20 plus already this year that have been reported, and I'm sure there are others that are unreported. It's scary, for sure. Obviously not great. It slaps a lot of the like KYC stuff, which all of these centralized exchanges, right, are forced to require, of course, legally. It slaps a lot of that in the face, makes you feel like, hey, we should have been anon or pseudon the entire time, right? Like these types of things just increase, I think, the willingness to do that. I don't know what else to say, really. I've been a supporter and a user of Coinbase for a really, really long time. It does appear as if, at least coming out with this, trying to take it as seriously as they possibly can. But what more can you do? I mean, I've always kind of laughed a little bit at the not your keys, not your coin type thing, just because who wants that additional burden? Like, I actually understand why you would want to hold it with Coinbase versus keep the private keys yourself. But at the same time, if, these things increase, then I don't know. There's clearly arguments on both sides. So I'm rethinking, every day as more of this stuff comes out.
Have you been personally? Have you had the texts and phone calls?
Yeah, and I've been getting them. Actually, I've been getting the not so much Coinbase. I keep getting this Gemini text weekly at this point in time. I've have an account probably at like most of the major centralized exchanges that have U.S. users. So Gemini, Coinbase, Kraken, whatever. So I've been getting a Gemini like recovery, type thing every single week here for the last week. But I've gotten other calls, emails in the past related to Coinbase. Yeah. And I just, of course, write them off, every single one. So hopefully there is no point in time in which it actually is true, because boy who cried wolf, I'd be out the door. But yeah,
I think I've gotten them every single week for the better part of the past year, to the point where I've just stopped tracking it. It just feels like routine daily spam call. Stats, I'm curious if you have a take on this. I think part 2 of the question is, how do you feel about Coinbase and their custody business model on a 3 to 5 year time horizon with banks getting into crypto?
Man, I'm kind of with you on the sense that I get so many people trying to steal stuff from me. I don't even notice it anymore. Like the number of phone calls, the number of texts I get. But I will say it's compelling. Like, I can see where someone who's a bit less savvy than we are, not that we're uniquely smart individuals, we just are on X a lot and we see people get stuff stolen. So we're aware of these issues.
Yeah.
But I can see where I have a friend here who has a brother-in-law, the 26-year-old guy, very smart kid, and kind of puts all his money into ETH, and he had it all stolen via someone calling him and somehow draining his wallet. So, and I think it was something of the ilk of the scams that you're talking about, lost 6 figures, and that I continue to think that's a massive, it's just a constant friction that slows down adoption. Every one of those stories expands to a wider reach of people that makes more and more people afraid of the industry. I don't know what I think is the safest space. I think that cold storage has a lot of issues as well. So I think self-storage is probably where the majority of crypto gets lost, empirically, even if people in our space don't feel that vulnerable themselves. As far as I don't know really what Coinbase's moat is. I just don't know enough about the custody business. I think their consumer business is at risk. Because just 2 years ago, if you wanted to buy crypto, you almost had, and you're American, you're probably going on Coinbase. Now I think Robinhood and just buying the ETFs are extremely good options, much easier, much more in line with probably easier tax reporting, all that stuff. Like, so I don't know what kind, especially with an administration like we have that's so friendly towards crypto and wants to make it easier for everyone to buy crypto, then if it gets easier, I think that Coinbase did benefit from how difficult it was to buy crypto, and they became the easy option. So I'm not sure but I just don't know enough about the custody business to have a strong view there. I mean, maybe there are real moats there. I'm not really sure.
Institutional side, very well may be safer. I'm just in the camp that if I personally could hold crypto on Coinbase or JP Morgan Chase, or just your personal bank of choice, I don't know why you would go the Coinbase route and take on this extra risk. And
I actually think it's not clear to me. It's not clear to me that they have deposit protection right now. Like if JP Morgan goes bankrupt, you're going to get depositors are the first who get their money back. I'm not sure that's the case with Coinbase.
There are some protections like is it called Coinbase? I don't know what they're Prime, is that what it is? Yeah, there are some protections with that, but it's I think much smaller than like the FDIC is what $250,000 or something like that at a minimum, depending upon the account or whatever. I think it's like 100,000, maybe 150,000. I have to go look, but I do know that there are some terms there for some protection, account protection, but you might need to be subscribed, to their subscription business.
So I think a good response here from Coinbase, but I think there's a question too little too late. So we'll see how this continues to play out. Like one of the biggest surprise stories of the day, continuing to go through this list. I don't know how many folks saw this, because I haven't seen very much chatter on the timeline, but Tether is getting into the AI business and they're taking a lofty a lofty swing at this. So they just announced QVAC, Quantumverse Atomic Computer. It is visioned to be a decentralized AI platform to run entirely on personal devices. No centralized servicers, no big tech middlemen is how they're spinning it up. It's named based on Isaac Asimov's 1956 short story, The Last Question, which involved the self-evolving computer, which takes humanity to the end of civilization. Interestingly enough, I skimmed that short story. It's worth a read if you haven't. But this platform enables autonomous AI agents to operate locally on laptops, phones, even like things like brain-computer interfaces. So they've got big visions for this, and then also transact in Bitcoin and USDT. So they're really tying this back to Tether and the stable coins here. Their key features: local AI execution, crypto integration, and then open source development. And if you go and read through some of Paolo's comments, it really does feel like the decentralization angle is a big one, kind of coming after big tech and not wanting big tech to be the gatekeeper of AI. And then also to get crypto in the door here as well. So I haven't had a chance to really dig into this and get a whole lot of personal thoughts on this one. Clearly, Tether very well capitalized. Logan, I mean, we chatted with Jason, previous CEO of Lucky Trader, who's deep in the AI game. He basically, I think his reaction was, it's a big vision. It's going to be hard to pull off. Right now, AI compute on personal devices is much worse than on like higher powered machines. And that perhaps they should go more after Stripe and look at how to really integrate Tether. But I'm curious if you had any reactions to this or
yeah.
Surprised.
I think, idealistically, it sounds great. The idea of the decentralized AI in this manner, and hearing like not, AI not being monopolized by one company or two companies. Like, I'm for that. What I didn't get from this, and some of that may just be my general technological ignorance, is how. Of course, I understand you want it to run locally on these, individual machines, kind of putting it in everybody's pocket. But there is no, and maybe it's just in a piece to follow this. There's no really, at least in my view, there was no clear how is it going to be done, which makes, forming an opinion on this a little bit easier. But that's the part that I'm still kind of waiting to see is like, what is it realistically, time frame wise, implementation wise, like is it actually going to be possible anytime soon? Obviously they feel that way if they're investing this much money in it, and time, but
they're taking some big swings. I mean, this feels like a longer term bet. They're well capitalized. They're positioned to do this. It does feel like, to answer your question, it looks like they're building their own architecture to enable this. So we'll see if they're able to pull it off. Not necessarily a topic that we are able to invest in right now, unlike internet capital markets, which are investable. So I think we can't go through the market report without talking about this. I mean, the numbers are staggering. They are pulling back here live during the show, it looks like. So Launchcoin Believe app ecosystem sitting around $400 million right now, $730 million in 24-hour volume. It looks like their fee numbers have dropped a bit overnight. So they're around $2 million. As of last night, they were at like $4.5 million. So I think that they've pulled in somewhere between $8 to $10 million in the last 3 to 4 days. So the fees are strong. Launchcoin itself peaked around 360 million, I think, 340 last night. Holding around 256 million right now. This comes after somewhat of a big announcement from Ben Pasternak, the founder, said past 2 days have been wild. We've seen a surge of interest. We're going to pause on featuring new projects to focus on the supporting ones. And our priority is making sure they have tools and resources they need to succeed.
Can I ask a question, Todd?
Yeah.
Very basic question, because I'm out of it. How is internet capital markets different from the game we've been playing for 5 years? Like, what does that term specifically connotate that has not been part of the game, the crypto game for a while?
I'd say there's a bit more substance than just a pure shitcoin, which is just a ticker.
Okay.
Whereas this coin, while it's still a meme coin, you're not getting equity in any way. It is tied, at least loosely, to a founder and a product. And that founder
some of them.
Product, sure. And I'll address that in a second. And that founder and product can perhaps integrate token sinks into their product in the future. They can figure out a way to tie in token holders into their ecosystem in some capacity. Interestingly enough, I mean, it is very similar to the Jelly model that came out back in January, and it was widely mocked. This one just a little bit more buttoned up. There's more of a framework and a team kind of pushing it forward with the Believe app group. I think to your comment, Logan, I mean, to reach these numbers, 14,000 token launches. There haven't been 14,000 products launched on the Believe app. There's not 14,000 builders who have launched this week on this app. So the way it kind of works with launch coin is you can tweet a ticker and it launches a coin. So there are thousands of just that are just pure shit coins launching in this ecosystem as well. What Pasternak and team had been doing was featuring one, maybe two, like more true builders in their products on a daily basis. Perhaps not surprisingly, based on a lot of the commentary, there's not a whole lot of new entrants in this game right now. So what we're seeing is hyper rotation. So when a new product comes out, last night's hot one was Yapper. Yapper came out, ran straight to 20 million. All the other leaders pulled back 30 to 50%. So it became this hyper rotation game. And basically anyone who had bought any of these tokens, for the most part, with maybe a handful of exceptions, was down on their buys, unless you got in super early. And I think Pasternak and team saw that, and they're like, hey, we need to pump the brakes on all of this.
Okay.
So I think from my lens as a holder of Launchcoin, disclosure, I do hold Launchcoin. I personally think it's bullish that they need to slow this down. The hyper rotation was getting very messy. They also have a pretty big sniper situation happening where snipers are getting huge chunks of supply of these and dumping on everyone. That needs to be resolved. It was clearly unsustainable for them to be making $4 million a day, 4,000 launches per day. There's just not enough capital in this ecosystem to support that. I think slowing down the pace makes sense. But caveat or asterisk on that, they can't slow it to zero. There needs to be continued launches, even with a slower pace. So I am curious how they will continue to manage it. But my gut read as someone who's in the trenches is this has kind of stopped everything else in its tracks. The Launchcoin eco has been the game for the past couple of days. And I think that's reflected on the DEX board. Let's look at these. Trump coin's always number one pretty much right now with respect to volume, but Launchcoins too, Yapper, Startup, Unicorn. Those are all Launchcoin acts. I'm not Launchcoin tokens. Glimpse I'm not familiar with. It looks like it is. Bump is as well. So 6 of the top 7 coins by volume are all Launchcoin. So this is the game right now. I think that the big question is how long is it going to last? My gut is that they bought themselves some time with this pivot. But Logan, I know you've been following. I'm curious if you have predictions.
Yeah, I definitely think they have bought themselves some time. To answer Stat's question, at least from my opinion, how is this different from what we've been doing? I don't really think it is too much. Of course, there is that tie, that jelly-like thing where, there are products. Is Dupe the luxury furniture? Or yes. There's one of them that was a luxury furniture company. So there are some things here that are trying to be a little bit different than just pure shit coinery. The issue being that it's not equity, it's just a meme coin for this company. It's kind of like a Kickstarter-y type thing. But not all of these, as Tyler mentioned, not all of them have that built-in Kickstarter benefit yet, right? So you're kind of just buying the token, maybe hoping that they give you a 10% product discount or something. So I can support the innovation there. I'm totally with that. I'm skeptical in a lot of these launching at this point in time. I think if you're a founder, who's struggled to raise capital or wants to raise capital, why not take a chance here? I'm totally okay with that.
Can I just interject? Are people owning this for a 10% product discount? Is that
no?
I mean, but if they don't think they're going to get equity, are they just hoping that what do they think they're going to get?
That's like kind of my point. It's like I don't know if Dupe or if any of them have offered something like that, but right, that's the theoretical, right, Tyler? That's like the idealistic version, perhaps, is that
10% discount is why you own this coin?
I think that might be a little simplistic.
That's just an example. I don't know what it would be to offer. Right?
That's what all of us to zero.
That's what Kickstarter is, though, right? Kind of is like you're giving some sort of benefit for investing. Otherwise, if there isn't that, even if it is a 10%, like whatever, make it any percent or any benefit. If those aren't there, like why are we doing this? You're just giving the person money for nothing, which maybe in an ideal world, like you're investing, you're, what do you want to call that, charity type thing? I don't know what that's called, but that's the concern for me for letting this exist outside of a 2-week bubble. Is like, how do you get people to keep buying these tokens?
Well, and the problem is, I think I think it's totally fair to be skeptical, and perhaps that's the right emotion. I think most of these are going to fail, and most of them aren't going to be able to figure this out. It's hard to evaluate this objectively on a 2-week time horizon. Like what if it takes one of these teams 6 months to figure out a way to integrate a token? And I mean, mainly even like we talked about Rect as like a great internet capital markets example. The Rect equity played out 2 years into the project. Like it was far down the line, and I think it takes time.
Yeah, so
builders are going.
So I would agree. Yeah. My bullish scenario here, if I was running one of these, it'd be like, right, how could I actually get equity in my company to these holders in some way, right? Yeah. Is there a way for me to do that legally? And then secondly, create some sort of flywheel with the token. But I don't even know if that's what. I know Stats, you were part of it, but like this feels, we're not doing anything new. This kind of feels a little bit like Proof or Moonbirds back in the day, right? Like where it's more like it's come out of California, kind of cruise of startup founders who are like, right, we're going to do something. And I just don't even know if they know. When you say it's been 2 weeks, we haven't really seen this. I think we've seen this story like 1,000 times. Like it happened all the time during NFTs. It happened a lot over the last few years with like utility meme, last year and a half utility meme coins. I think it's going to be difficult for these like more startup-esque founders to realize that these guys want you to pump their bags, and if they want equity and they want a flywheel, I don't know how many of that, even though these token holders, these token launch companies have any concept of what they need to do to create medium-term value. And yeah, we may find out in a long, long time or in the next few months who will do that. Or maybe one person will do it and realize that's the best flywheel, and then all the others will say, hey, yeah, we'll do that too. Maybe that's the best move, something like that. But it feels pretty tenuous at the moment.
I would highly doubt that the token launchers right now know what they're getting into from a who's buying this token, who their consumers are, kind of at this point in time. I would not want to be someone launching a token. I mean, we had this conversation with the Boop thing like last week, Tyler. Like people didn't want to launch a token. This is the same type of thing. You're committing yourself in some way to these people. The only difference is you're picking up like sizable fee payments almost right away.
So that's something you're a founder you're going to notice right away.
You are,
and
yeah.
You want to keep that going. The Yapper founder has made $1.17 million in fees since they launched at 6 p.m. last night.
What is Yapper? What does it do?
It is from let me try to find it's a deep fake AI.
Yeah, that's part of it too, right?
I believe it's had some fairly big success.
No further questions. Thank you, Tyler.
100 million views. I don't know this guy's full backstory. And this was a curated launch. So Pasternak shared this one.
Mando, what was it that made you say no further questions? What was the ridiculous statement?
Because it's just like no one even know what the product is. This is just a Ponzi, right? Like it's just whatever's come today.
Well, I actually disagree. So, I mean, I didn't really trade one, so I didn't like do a bunch of due diligence on it.
All right, okay. I thought it was one you owned, but The one thing that struck out to me is what you said. And look, I told you, I think a lot
Just
of
because he did no due diligence does not mean he doesn't own it. Let's be clear.
Oh yeah, of course. The one thing that stuck out to me is you said a coin ran to 20 million and everything else nuked.
Mm-hmm.
That tells me that there's no new entrants.
Yeah.
Right. AI coins used to run to 100 plus, like 200, and then that would cause other coins to nuke. But like we used to see huge runs, right? That tells you like the dregs of who's left on this sort of on this meta of like, right, let's do a startup. And then they literally had to tell the app itself had to say, look, we need to calm down because 20 million is in November. That was like nothing, right? No, like random coins were at 20.
Yeah,
straight away.
I think it's sign of the times for sure. And I think you're spot on. No new entrants. I feel like this all started way too fast. It blew up way too big. And he really had to slow the pace, or like it was really just going to speed run this whole thing. And I mean, there's been 14,000 launches basically in the last 3 days, 4 days. It's too many. And I'm personally just every single day, I'm thinking multiple hours per day how to handle this. And if I think it's going to continue to go, it's going to continue to dip. And we lost Mando. I know we'll wrap things up here shortly. It's a tricky one because in a lot of ways, I feel like this is stronger than virtuals. It has potential to be better than virtuals, bigger. But a lot of things have to go right. They have to have some good products launch. You can't have everyone who's buying a token go straight to zero when the next product launches as well. But Logan, I know you got some thoughts.
Yeah, I'm just thinking. I'm thinking through it with you here live as well. I'm totally for this type of thing. The issue is going to be you can't just keep burning the consumers or the buyers of these tokens. I don't want to conflate consumer of these potential products, but like if this is great for the founders, like this potential thing, right? For people who have either struggled to raise capital or just want to be a little unconventional in the way they raise capital. Like this seems like a really interesting idea. And of course it's obviously proven itself even in this 2 week span, for a very small, short period of time, it has proven its ability to do so, to raise the money for these people. The difficult part is like, okay, 6 months out, what does happen? Like, is the token at zero? And then all these people that bought, like if you start to see that play out over and over and over again, then people stop buying the tokens. And then people don't fundraise via this, and then it's all over, right? Yeah. Like, I just don't know how you sustain any real or enough real token, like token launches to just extend this thing out and to make it worthwhile for so many participants.
Well, I think part of a potential bull case, I think you need like the Nikita Beers of the world. You need them to perhaps pull in a larger base. Right. And I don't know if that's naive to think that Web2 people are going to come in and buy these internet companies. It probably is naive. Right. I'm just saying like that's a potential example.
Yeah.
What might need to happen. But they keep saying a laundry list of real founders. And I think if more real founders and builders come to this, it's going to attract more attention.
Yeah, I think so too. I'm not ruling that out in any way. Like someone for myself, right? Like I've not actively been participating in this. Of course, I wish I had been. It's been a boon for anybody who's been actively playing in the last week or so. But like to get me to buy one of these tokens outside of, and I'm talking about the launch tokens, like from these companies or founders or product, whatever, to get me to buy one of them, knowing that it's just a meme attached to their product. Like I sort of want something in return for that. You know what I mean? Like thinking about that, like if I maybe just because I keep comparing it to Kickstarter and it's slightly different than that, like I sort of want some sort of thing in return. And that's what they can't really offer, right? They can't offer me equity for it. I guess maybe they could include the token sync in a, like I said, like a discounty type thing. But I'm not seeing that, at least in these product launches just yet, right? Like no founder has it drawn out to where, hey, this is what we're going to do with the token type thing. Mm-hmm. That's the type of stuff that I would want to see. And of course, maybe that takes time. Maybe that can never happen. I don't know, because there's obviously legal ambiguity that I'm not equipped or knowledgeable enough to comment on here. So
we'll see. I still am in the camp. It's very hard to judge this experiment on a 5-day time horizon.
sure.
Clearly, there's froth already in this market, and we're seeing it play out. I think it's a pretty pivotal few days with this recent pivot from Pasternak and slowing down the pace. So we'll see how this ecosystem continues to hold up. But I mean, it's the main game. If you're in the salon trenches right now, this is it. So we're going to continue to cover it because there's not a whole lot of other action. We're running out of time. We're not going to talk about some of the other NFT stories, but those Ethos NFTs had some nice little rally. So did the Rific Anadol NFTs. So maybe we'll cover those on tomorrow's show. But folks, we're 5 minutes over. We're at the hour mark. Going to go ahead and wrap things up. I want to thank all of our listeners for joining us here today. I want to thank my co-host. I want to thank Stats for stopping by. Incredible conversation. Thank you so much, folks. Have a great day, and we'll talk to you tomorrow. Bye.
Thanks, boys.